I couldn't have said it better myself, folks. Thank you, Shannon Sharp. That's a great, just a great, just impersonation of how I'm feeling, right? That's a personification of how I feel right now. You want to know why? Because we got earnings coming up, baby. Earnings season is back in action, and I know you're happy because I sure freaking am. Let's get into it, folks. So we got the week of July 10th. I got three main stocks I'm focusing on. As you can see, it's still kind of a light week. Now, the week after this, oh my goodness, oh my dang, oh my goodness, it's going to be incredible, right? But hey, for this week, July 10th, we still have a lot of fantastic earnings coming up here, and I hope you're all excited about it. So let's get into these ones, see what I'm kind of looking at, and hey, maybe get some plays off of that. So let's go right on into it. First, starting off with our Monday before open. Look, this lady started. She was really the catalyst for the Trojan War. This lady alone, Helen of Troy. I just got to be honest here. It's not a name of a company I would choose. You want to know why? Look, I guarantee you, if you Google Helen of Troy, do I need to prove it? What's going to come up? Do you think it's going to come up as the company, or do you think it's going to come up as Helen of Troy? All right. I mean, look. First thing that comes up, that's right. Sorry, Helen of Troy, you come up second. First comes up the OG Helen of Troy. Just gonna say that right now. Regardless, don't know too much about the company. I can't lie to you. I'm just trying to buy some time here. After close Monday, it's actually a company I don't follow too much either. With WD-40, kind of shocking. I don't know what all. It's definitely one of those companies that when you actually look into it a little bit further. They've got a lot more brands than you might expect. It's not just the company only sells WD-40, and that's about it. So regardless, still very interesting that they are by themselves, a publicly listed company, and they trade by themselves. So kind of crazy, but hey, it's pretty exciting. I know a lot of people are probably interested in a little WD-40 stock. Monday, again after close, Saratoga Investment Corp. That's what you got. Cal Amp after them, and E2 Open following them Monday. No one's on my look. None of these companies are on my focus for the week. I hate to tell you. Even Burma, not quite Burma, or Burmese, not a Python. It's Burma on Tuesday before open. Looks like you tried to steal the Google Chrome logo, but you didn't do a great job of it, right? You really tried, and you just basically made it one color and added some connecting lines, but kind of lame. Not a big fan of the logo, folks. Anyways, skip on Tuesday. We're going into Wednesday. I hope you're excited here. We've got AngioDynamics, followed by Thera Technologies. You're excited. You know what the focus is coming up here, but not yet. MillerKnoll after close. Now that sounds like a boring company. I've never heard of a more boring name than MillerKnoll. It just reminds me of they probably sell some upholstered furniture. That's just what it sounds like to me, and it's just boring, and I don't want to be part of it. Get out of here, baby. Thursday, that's right. We're focusing up on none other than Delta Airlines. Delta for their I don't know. I've never been on a flight. I can't lie to you, so I can't say if the service is good or not. I've seen definitely horror stories of service that's been pretty bad, where people have been kicked out of their actual first class seating, and they've been sent to coach because the staff wants to sit in first class. I don't know. I don't know if it's true. I mean, it's got to be because it's on video, but I've seen it. Anyways, let's look at the stock itself. Needless to say, this one is on my focus radar because, well, let's take a look here. Oops, let's zoom just a little bit that way. There we go. So you can see the full picture. Why is this one on there? Come on now. Let me flip to the year-to-date chart, and you just tell me what you notice on this one. Look, let me just tell you, this last month here looks a little bit like, once a man hits that REM sleep, whoop, starts rising a little bit, if you know what I'm trying to say. Ladies, you might not understand here, but something happens in the morning, and it's just, look, that's what it looks like here. Similar shape, actually, to that. Mine is at least. Anyways, the main focus here, this is ridiculous, man. In the last month, we look from the start of June, the stock is up 31% alone. Year to date up 46%. Now, really any of these companies that are in this, I would classify them in the experiences category. So travel and leisure type industries, they've done really well over the last month. You see other stocks, even in the cruise line industry with Carnival Cruise, the stock's up over 100% in the span of a month. These stocks have taken a massive bump, well, for a couple of reasons. One, it's a pretty good indicator that the demand has been very strong, surprisingly. We've seen the economy. Look, I don't think it's as good as some things look right now. I think we're still in a bad spot here, but people are spending like crazy still, and that's why I think we're kind of in a bad spot. Anyways, this is a stock near its 52-week high. Where else do you see that right now in the market? It's pretty hard to find a company trading in its 52-week high. And this is one that really, let's go back 5 years. I mean, this thing has been a really dead money since 2020 when everything crashed. It's been dead money, right? Just going from March of 2020 all the way until that. I mean, look at this. It is still not back to its pre-pandemic levels, $59. It's still down over 20 or 19% from that point. Now, if you bought it at its, lowest point, you'd be pretty happy right now. But let's just look from March of 2021 until just recently. I mean, the stock was down an additional 30% from really a 2-year span. The stock was down over 30%. That's disappointing. And then just all of a sudden, out of nowhere, in 1 month, they're up another 34%. Pretty wild to see. So that's why they're one of my focused companies here. And you want to know why? Expenses have gone down. We've seen cash flow resume for these companies, Delta and other similar companies here as well. We've seen the cost of tickets has risen now. We're finally getting some rising tickets. They used to give away tickets back a couple of years ago. They were giving them away. They're finally able to raise the prices. Fueling cost a little bit lower for them, right? Still high, but a little bit lower than they've been seeing. And that's led to a bottom line that's looking a lot better. And you see it here in the EPS line. Expected $2.36 of EPS versus $1.44 of a year ago. Significant growth there. And you look in the current year total, expected $6.10 this year off of $3.20 of a year ago. That's a significant improvement there. And again, it's kind of exactly what I detailed there. And all of those really, not only cost-cutting measures, but just expenses in general have declined, right? There's been a decrease in expenses required there. And it's been pretty nice for them. Now, revenue still continuing to grow pretty well here, right? And this is against really weak numbers. And most of the growth here is because of ticket sales. Let's just be real with each other. Not necessarily quantity, but pricing of these ticket sales has been definitely improving. And you see that. So even if they stayed consistent in the number of tickets sold, because of the rise in ticket prices, you're going to see a revenue growth similar to this. Expected a 17% growth year over year this quarter, $14.4 billion. For the full year, expected $54 billion, which is an 18% growth. Now, you look further, 2 years out, that growth rate's expected to normalize back to where it was. So this year, you're going to see a much higher growth rate than previously because we're going off of pretty cheap numbers. If they're able to post these lines that we see here, look, I believe this stock could definitely stabilize at this level. Now, as far as upward movement from here, it's still trading in a relatively cheap PE ratio, got to be honest. But one thing I have to note here, it's the momentum is scary, right? The momentum is scary. It's hard to continue this type of momentum. Usually when you see something like this, you might see an additional breakout and maybe see a high somewhere above the $50 mark, maybe mid-50s. And then you often see after that a little bit of a slope down and a decline. Now, does it deserve it? I don't think it does. But when you see a massive upward spike like this, like me in the morning, I don't know if you don't know if I didn't say that. You don't know if you love it too much from that standpoint. A lot of volatility here, and it's going to be interesting to look at. If they hit the goals, look, I think they're going to need to. If they happen to miss these metrics and even guidance, this could be pretty rough. It could be a rough day for Delta Airlines. Just be on the lookout, okay? Following them, oh, baby, crack open a cold one with a Pepsi Cola. don't. You should probably get Coca-Cola. Definitely a tastier cola product than Pepsi. Sorry to tell you. Um, why is this one of my focus stocks? Well, again, it's in the price action. People aren't loving these companies anymore. Investors are not digging your classic value plays, and maybe there's a good reason why, right? These are companies that, look at this one, only up 2% this year. Um, and you look on a 5-year stack, it's pretty consistent in growth, but then this year it just says, hey, I don't really like it too much. Um, it's usually a pretty consistent riser, and then this year just it hasn't shown it. And you want to know why? Investors aren't buying into this right now. You know what investors are buying into currently? That's right. They're loving technology yet again. People are back on the technology train. You look at a company like Nvidia, AMD, these stocks, and even Apple. I mean, these stocks are just absolutely going to the moon lately because people are really selling out of these old, boring companies, is a good way to put it. PepsiCo's boring. I mean, there's no other way to, I mean, that's the best way to say it. They're selling out of these and buying back into the exciting companies again, these tech companies. So that's why Pepsi hasn't had a great year. Now, what are they expected? $1.95 of EPS versus a year ago, 186. Nothing crazy there. Not expected too much of growth. And that's fine. I think that's plenty fine. I don't know if that helps the company, really. Sales growth expected 7.4%. And you look at that, 21.73 billion expected. So why is the pricing in the stock where it's at? Look, the company's trading at a P ratio over 30, really over 35. With numbers like this and a growth rate of 7%, that doesn't get investors out of bed right now for a P ratio of that nature, right? They want to see this thing trading in the 20s. And the only way this company can do that is obviously a continued decline and obviously stock price potentially, and raising that EPS and raising the EPS estimates. That's how they're going to be able to get investors back into the stock. And we need a bit of a cool down in the tech industry. So, overall, I think the numbers are going to be good on here. I think it's going to be a good earnings report. I honestly think they beat on both aspects. I really do. Now, what does it mean for the stock? It's just hard to say. I don't think people are buying back in just yet. Following them, we get Progressive. I don't follow the insurance companies too much. You already know that. Cintas following them. Nothing much to say about them. Neither them nor Conagra, really. Conagra Falls is not. I've never been there, but I'd love to go. Fastenal, sounds like they've got ratchet straps. It's that they specialize in. Just a fact. NTI, then WePro or YPro. I know the Wii Motion Plus is that maybe that's who makes the Wii Motion Plus. Makes the makes the remote sense about 0.3% better than just having the generic remote. So I respect the technology. Then we've got AEHR Test Systems. Air Test Systems, as some might say. Look, let's move on to Friday because it's kicking off a massive part of earnings week and really earnings season. And that's going to be the financials. And I'm just starting off with JP Morgan Chase is one of my focus stocks, okay? Get out of here, Helena Troy. Why do I have a search up for that still? So JP Morgan, why do I list them? They've been caught up. I think it's one to look at because not only are they involved in the banking industry, but also in the brokerage business. And I mention that specifically because the Chase connection, because it's one that's been really swamped down with a lot of the banking issues that have happened here this year. If you look year to date, you know exactly what happened during this March timeframe, the Silicon Valley Bank crisis. Bank went out of business. Okay, what happens in that basis? Because they have that tie into Chase Bank and they purchased Chase Bank, the stock fell pretty significantly, right? Equivalent of around, a little over 11% in the span of a month because people thought everything's going to go down. Everything's just ruined. All these banks are going out of business. Not the case with a big bank like JP Morgan Chase. It just doesn't happen that way, right? So it's worth notating. People freak out. That's what they do. Now, to be honest, year to date, the stock's only up 6%. And I don't think that's much. And here's why I don't think that's much. I look at the stock itself, and it is incredibly undervalued right now. I mean, there is no denying because of its tie-ins with really the financial industry and all these stocks that have been really plummeted from there. Investors just aren't liking them. They don't think they're safe. I mean, it's just not working out for them. P ratio at 10. And I think that one's going to lower. And you want to know why? I look at the EPS line expected, and it's going to be incredible. 397 expected versus 276 a year ago. Let's get into the revenue, and I'll kind of see why I'm seeing this. So 38 $1.97 billion expected in revenue, which is a 23% growth rate. Now, again, a lot of this from what I'm expecting here is going to be mostly tied to the brokerage business. So the JP Morgan, Morgan Stanley side of things, JP Morgan, from an investment banking standpoint, that's where I see a big chunk of this growth coming from. The EPS as well as the revenue. From a banking perspective, again, I just don't think you're going to see massive numbers in net new deposits, things of that nature. But when you look from an investment banking standpoint, I don't have a doubt in my mind you're going to see actually a pretty decent number of new net, or really a gain in total assets under management. On top of that, also just overall net assets with the firm likely increase. Net deposits increase from a brokerage standpoint, in my opinion, on this one. That's just what I'm thinking here. Keep an eye out for it because I think that's going to be what's springing forward this growth. And with that, the EPS it's dirt cheap when you look at a PE ratio, and really all of these financial companies are trading at cheap levels like this. So, hey, I'm looking at this earnings as a pretty big indicator, and I think there's a decent chance the stock goes up. I can't lie to you. So, moving on from them, I've got United Health Group, another one to look at too, another insurer, the biggest insurer here, and really the company here, or in the country here, and I look at, I didn't have them pulled up here, but the stock pricing action is definitely interesting on this one, right? You look year to date, this one's down 11%, trading at a decent PE ratio at 21. And again, insurance isn't going anywhere, folks. I hate to tell you. United Healthcare's kind of taking a bit of a hit here this year, so that's definitely one you need to look at. Not one of my focus stocks, but I wanted to point that out. Citi, another similar story, trading at a cheap rate because of that. This year's earnings. Because of that tie-in with the financial industry. Sorry, the dog was barking. Had to mute my mic. Wells Fargo after them. Similar story. Then we've got Ericsson, State Street Bank. Now, that's one of those more small regional banks here. One to look at there. Not necessarily small, but I mean, in the scope of banking, they're not one of the big mega firms, mega banks. So, one to look at. And then we've got BlackRock, who owns literally everything in the entire country. That's BlackRock. With that being said, folks, I love you all. Hit up that freaking like button and the subscribe. I know you will. And you have a great rest of your day. Tell me what your earnings plays are. Tell me. Leave them in the comments. Have a great one.